Welcome to the Crazy Wisdom podcast. I've got Paul Sztorc here, and he is the CEO at Layer2 Labs. Welcome to the show.
Hey, thanks for having me.
So there's a bunch of different places we could go. Let's start with Zcash. What is the relationship between Bitcoin and Zcash?
Well, currently, unfortunately, there's not enough of a relationship. So Zcash is a variant of the blockchain design where the sender, the receiver, and the amount are all hidden. They're
Cool.
all not obvious. But in the Bitcoin blockchain, the sender, you can see at least the unique key pair, the public key of the sender and the receiver, and you know how much was sent in a given transaction. So it's not as private as people would have liked. And that's why Zcash was invented as an alternative. One of the many projects that we work on at Layer2 Labs is taking that same privacy technology and putting it as an optional layer 2 on Bitcoin so that you can move the coins from L1 to this L2, and over there you have the same experience that users of the Zcash altcoin have.
Very cool. So it's a layer 2. You're building layer 2 as a easy mechanism for transferring Bitcoin to Zcash. Did I get that right?
Not quite. It's not. Zcash is like you have to separate the technology stack of Zcash and the code from the altcoin. So it's made its own project. Zcash is its own project, and they have their own altcoin that's separate from the 21 million BTC. And we try to reuse a similar idea, the ZK snark or this zero knowledge cryptography, and we make it so that you can take your Bitcoin and put it in a new zone. And in this new zone, it has the same attributes that the Zcash altcoin would have with its software, but this is only with Bitcoin. So it's the same 21 million Bitcoin, but the Zcash feature.
Principles. Okay, got it. So this is not related. So it's more having to do with ZK proofs.
Yeah, it's more about bringing the features from an altcoin to Bitcoin, but not bringing the altcoin. And so the idea is you have 21 million Bitcoin, but we'd have whatever features you want. You have Ethereum, smart contracts, you have Zcash, privacy, et cetera, et cetera. You could have different block sizes or different, you could write the blockchain in a different language. So Bitcoin Core is in C++, but you could just have the L2 can be whatever you like.
So how does it work to have it? I've heard in the past, I haven't looked into it very deeply, but I've heard that L2 layer 2s on Bitcoin have been slow and haven't worked that well. Is that accurate? What are some other, is Rootstock a layer 2?
Yes, but you're in good company if you're confused about Rootstock, because just about everyone is. And even I sometimes I'm like, what are they doing over there? And they did all this fundraising back in 2015. There was a huge amount of money, and it's like, I don't know what's exactly going on over there. And another reason is that we built our own. It was kind of a little bit of a toy, but we basically forked Geth, the Ethereum full node, and we made it into a Bitcoin L2 as a kind of demo. And we did that like in 2023. And this only took like maybe a month or two. But that was supposed to be that was supposed to be Rootstock's project, was Ethereum on Bitcoin. But then we were doing it in like 2 months, and it's been 10 years. So I don't know. No one knows. I mean, I like the Rootstock people are great. I love Sergio and Diego, and they're very neat. But it is confusing. I don't mean to criticize them, but I think that they definitely could do a better idea of saying, this is what we want to make, and here it is, because we've been working on it for 10 years.
That's crazy.
Go I agree with you that a lot of the L2s aren't good. And in fact, I created this company and I created all this work because I looked around and I thought all this is terrible and it could be much better. So I think they are not very good. And unfortunately, I think it's a very difficult thing to convey without someone running the software themselves and seeing for themselves like exactly what happened. There's also another difficulty in explaining it, which is that there's like a lot of people just lying out there to get, more favorable attention or deals or whatever, or they want to launch something. So there's not a lot of incentive, to be honest. And it's also just kind of confusing. Like every technical thing, it's very easy to just paper something over and say, oh, it works as a demo, it works it works on our website or something like that. Like it's very hard to actually prove something out in the battle-tested arena where it's going to be attacked by maybe hackers or come under some kind of stress that would require decentralization. So it's for something to be battle-tested is really, really hard, and it's very easy for imitators to steal the valor, or however you might
Well,
call it. So it's very hard to explain. And unfortunately, I think it's going to be like .com or something where there's like tons of scams, and then at the end, there will be a few people left standing. I'm a little bit pessimistic on explaining it to people, having tried to do this for 10 years, explain why these L2s aren't very good, why they probably have no future, what we should do instead. And I've had some success with that, but not enough to like move the whole Bitcoin culture to where I think it should be. So I think it will take a little while.
Yeah, well, and so what you said about a bunch of scams and sort of like it all blowing up, I told a recent or some podcast guest in the past, I told them that, you know, that's going to happen, right? If there's going to be a Great Depression like event for crypto, and they're like, well, that was 2022. That was FBF, like that was like a crypto winter, basically, where it all destroyed, right? FTX, yeah.
Well, that was an example. Yeah, I think we definitely go through cycles of optimism and then unfair pessimism. So, but this is a common pattern also, which is that, for example, for example, with Theranos, there was this scam blood company that maybe people are familiar with, and but when that comes out, it's so-called sucks the air out of the room. In other words, if you wanted to start a blood company at the time, it would not be possible because everyone would say, well, how are you going to compete with Theranos? Theranos is this great, great, great company. So when there's the delusional optimism, it's bad for all the good ideas. And then when Theranos collapses, now how are you going to start a blood company now? Because everyone's going to be very wary and skeptical. They're not going to see, most people are not, unfortunately, you know, it pains me to say this. I wish it weren't the case, but most people are very superficial and they only see the cosmetic surface and they just think blood company bad or whatever. So this has happened in Bitcoin where, you know, the L2s of Lightning doesn't work very well. The other L2s are kind of not real with the extent, you know, talking about liquid or even like Fediment. These are like cheating by just masking multisig as L2. This is also happening in Ethereum where it's just a multisig where a bunch of strangers or even one person who has all the key, because you have no idea how they do the multisig ceremony. One person can just take all the money immediately. This led to the so-called custodial L2s, which is again, that is just like kind of saying like a dry ocean or something. But this is just a language game that people have played to keep the grift going, and so it's going to be very difficult to untangle all the nonsense. But there you go.
Yeah, well, I mean, and that's just not within crypto as well. That's the strangest thing about the state of the world over the past few years is that I come from Silicon Valley, and I come from a Silicon Valley. I was born and raised there, and a lot of the people that I grew up with are really involved with that early wave. And during that time, none of there was BS, like Oracle famous, maybe not so famously, but in 2001, Larry Ellison did what he's doing today, which is basically making up numbers about how they're going to have $300 billion in contracts over the next years with OpenAI. Sam Altman's also pretty good at that. So, you know, like there have been hucksters before, and I'm not calling Sam Altman a huckster. Like Oracle, that in 2001, he did actually make up numbers. So like there are people who essentially oversell and then either deliver or underdeliver, but it doesn't matter at that time because they've already got the attention, and all you really need to get is their attention.
Fake it till you make it type idea.
So that existed in the Bay Area, but then it wasn't like fully into it. And then starting with the social media companies, particularly Facebook. I mean, Facebook is just like, the guy was buying VPNs to spy on users. There's so many things that guy has done that are clearly outside the bounds of what Western culture promotes and its values and what Silicon Valley used to promote. And so that created this whole giant narcissism bubble that just kept on going. And then crypto came into it, and crypto tied money to it. But there is a value, like there is a huge value in Bitcoin. I think there's value in Ethereum. I think there's value in Chainlink. I like those companies. and this is not investment advice, but so there is something real to it there, but the process you mentioned, which is really real as well, and that leads to a sort of media technology question, because what created those in the 2010, from 2010 to 2020, you had all of a sudden social media mixing with the TV. So the TV could broadcast to hundreds of million people, and then it mixed with social media so that hundreds of million people could be directed to these social networks. The TV no longer works. A recent podcast guest heard what I just said here now and was like, yeah, it's true. It is breaking down, but at least like 1 to 2 billion people, maybe a lot more than that, know that Donald Trump is president. So we don't all have synchronous attention all at the same time, but we definitely are breaking down to the sense that the TV can mediate that in such a reliable way that you could have 100 million people watching the Seinfeld episodes. So that long rant was basically to say that I think what you're talking about is going away, and that people are like, I think there's going to be a lot of builders. There already are a lot of builders out there building these things, and they'll get the attention that they need when it comes. What do you think? Do you think I'm onto something there? Do you disagree?
Secret third? I do think that we should eventually. I do think and on a long enough time frame, the frauds are all found out.
Yeah.
So maybe they drag a lot of good people down with them, or innocent victims. Also, I think that's also common. But I do think you can't really get away with it forever. I do think that it's easy, like your example with before the election, it's very difficult to tell who's going to win, or even who's currently in the lead, and everyone's got an opinion. And then over time, it sort of becomes clearer. Even on election day, it could be a photo finish. And then even a few days afterwards, it might not be totally clear, but then over time, it becomes extremely clear. And people just give up on anyone who tried to push like a conspiracy theory saying that that's actually Kamala, like in a wig or in a suit or something. That would not, they just give up on that. So that shifts out of the Overton window. So I think that's true. I think we do want to do everything we can to bring the truth forward in time. We don't want to stall progress. I think that would be would be sad, because that would be needless suffering for no reason.
That gets into the take about the information age, because everything we just talked about, we're in the information age now. The industrial age, while still relevant, is sort of not as relevant as the information age. And I think that process is basically going to reveal a lot of things, because now anybody with the LLMs can go and find out information. And whether it's true information is really interesting. Are you a believer in the Bitcoin sound money? When we have sound money, all of our political structures can get better, because we actually have something that is tied to truth in the sense of accounting, like a good accounting system where money is valuable again. Do you buy into that?
I think it is an improvement. I don't think it's the... I don't think it's like the end of the road at all. I do think it's a huge problem. Like no one has any explanation for the fiscal trajectory of the federal government in the United States, or really in all these other governments. So every federal government is just going to spend as much as they possibly can. And the model is not... I think it's a mistake to look at it like a household where you earn a certain amount and then you have a credit card or whatever. That is a mistake. The money that the politicians spend the money, and then the recipients get the money, and who pays for it are taxpayers in the future. It's a completely different group. And then even the bondholders, we go into debt, the bondholders get a bond, they get the risk-free asset that no one will ever default on, they get yield. Who pays the bondholders is future taxpayers, people who might not even be able to vote yet. And so that is not the right model. And Milton Friedman had a great thought experiment where he said, imagine hypothetically there's like a magic rich uncle or something who dies, and he has whatever it is in the bank, $30 trillion. And this is enough to pay down the national debt to zero and pay off everything and bring us back to zero. His thought experiment is, what would happen the next day? Is the politicians would spend the full amount back. It would be like a graph down, and then it would be like a little thing. It would tap up, and then it would go all the way back to the trend line down. It would go all the way back. They would spend 30 trillion on some excuse. And so the model is not a household. The model is pushing the envelope and saying we can get money out of this system until something breaks. And
And it's breaking right now.
well, it's going to break in a horrible way.
Yeah.
It will, whether you had Bitcoin or not, it will break. But if you had Bitcoin, it would probably break earlier because they'd need to actually come up with Bitcoin to actually pay. You can't just keep going into debt and then have the Fed service the debt with inflation.
If there were laws, if this is the thing about crypto that's so interesting, because if there were laws that tied Bitcoin to the treasury, if the treasury had to account in Bitcoin,
I think the ideal Bitcoin scenario is that all the federal workers, like people who work in the army and the post office and whatever, they would be paid in Bitcoin because Bitcoin has taken over. So now they know, and in theory they're running a full node, or they have a wallet that accesses full node, because that's what everyone does in theory. And so now the federal government just needs to obtain, in order to pay them, it needs to tax.
Oh, interesting.
And it can maybe pay them with IOUs and say, I'll pay you next year. But then those IOUs are bonds, and people could trade those. You know what I mean? So someone could say, listen, I know that the federal government's saying I'm going to get $60,000 next year, but I don't believe them. I'll sell you this $60,000 payable to the bearer, or 60,000 BTC or whatever. And I'll sell you it for 30,000 or for 40,000. So there's immediately a bond price, and there's immediately like market feedback for going into debt too much.
So really interesting points. Are you worried at all about the derivatives? The fact that there are now treasury companies whose entire stock strategy is to buy a bunch of Bitcoin and then have their stock be worth more because the expected increase in value. Do you think that?
I disagree with this, and I don't know. But the thing is, like I hated like Snapchat when it comes to. So just because I hate something doesn't mean it's not good. We need the world, Silicon Valley, right? We need the optimists to get their say, right? But yeah, I don't get this idea at all. So I have background in economics and in business and other things. And so to me, it makes absolutely no sense whatsoever. I mean, the whole point of the company is supposed to have some kind of comparative advantage. It has to take these inputs and turn them into outputs that are worth reliably much more, to cover all the overhead and to give the investors a return on the capital employed for the business. This is all like business school 101, finance 101 stuff. It's also finance 101 or maybe 102 or something, but you should not invest in a company that is going to buy Google stock or something.
Oh,
interesting. You should just buy Google, just buy the Google stock. This is nothing against Google specifically. I'm just saying you don't need an intermediary. You don't need a pointless.
Oh, interesting.
Middlemen are very good, and middlemen make the world go round, but you don't want any pointless middleman, really. Why am I buying Google? In other words, you don't want to buy a company that says we will buy copper, we will buy wheat. Just buy the wheat. What are they doing?
Yeah.
And in this case, I think it's very disturbing because the companies could get hacked. There could be a regulatory change.
Yeah.
They could just be an inside job, and someone could steal the Bitcoin and say we got hacked. And then this thing with the MNAV, this idea of the NAV is something like the company has $1 million worth of Bitcoin. It's currently worth $1 million, but then that would be the NAV equal to 1. But like for many of these companies, the stock, the company is worth somehow is trading at higher than so the company's trading at 2 million. It doesn't do anything, but it has $1 million worth of Bitcoins. But why wouldn't the whole company be worth 1 million? So wouldn't you short the company and buy Bitcoin? And this is exactly what people have pointed out. And this is what a couple people did. You can go back and read. I even tweeted about it. There was someone who'd been long Bitcoin in the real spot market, and then they shorted MicroStrategy. I can only assume that trade must have done well because that was like a few months ago. And even though Bitcoin has gone down a little, I think MicroStrategy has gone down more. I'm not sure. Always check the math, for yourself. But there was a guy who famously said that he would do this, and he said this has nothing to do with Bitcoin. He says I'm actually going long Bitcoin in the trade. This is basic financial engineering. Also, like this is again maybe not finance 101, but this is certainly derivatives 101. If you ever took such a class as I have. This is like we combine several different things to get whatever you want. So like an example would be you're in an airplane and you hear someone from Boeing and then they go to the bathroom and take a phone call and you can't tell what the call's about, but you know that they're really worked up about something. Well, you could buy like call options out of the money and put options so that the stock moves a lot in either direction. You make money. So that is so this is all. So all this stuff is so again, and there's even more to it than that. The treasury companies, like if you just buy Bitcoin yourself, you are kind of in the situation where uh, no one knows that you own the coin. I mean, it does depend on your own government situation and what tax jurisdiction you're in and what kind of other information you have and how you bought the coins but there's a sense in which like so for example, if you pay down debt, it's like a tax-free risk-free reward. So if you're in debt and you have credit card debt and it's 10%, you're getting charged on the debt. If you pay that down, it's like you got an immediate tax-free, risk-free 10% return. If you get an actual return in the real stock market, you have to sell, you have to realize the gain, you have to pay capital gains tax, you have to report all this. It's uncertain that you will, you don't know that you're going to get the 10%. So if you buy the Bitcoin yourself, it's kind of like you have a tax-free, the upside is sort of tax-free because it's in cyberspace and it kind of depends. And you can strategically like manage the tax consequences of that purchase. Whereas if you buy it in the corporation world, there's like now tons and tons and tons of maybe fees, taxes, who knows, and you don't know how that. So I don't understand at all why the Bitcoin treasury companies exist, and so but who knows? Maybe there's some.
I want to go into the technical details of what you're doing specifically with ZK proofs because that stuff is interesting. It's not totally in my wheelhouse yet, and I want it to be. But before we go there, I want to talk about like what about a normal company like Tesla buying Bitcoin as a treasury, as their financial hedge against their currencies and stuff like that. Do you think that makes sense? Any thoughts there?
I do. I think it could make sense. I mean, it does cut against what I said before, where I said you shouldn't buy. What Tesla should always do is what their owners kind of want them to do.
Yeah.
And so you shouldn't invest in Tesla if they're just going to buy Bitcoin. However, there could be a good reason, which is like if you're worried about having legal trouble and being sued and having some random judge somewhere tie up all of the assets of the company in cash. If you're worried about that, now you've got some Bitcoin. So now they can't. And now you can hire lawyers and you can have the appeals process go on and on forever. And so you may need it as a kind of like it's kind of like having a backup generator and fuel at your house. And so that in that way it might actually serve a legitimate business purpose, and I think that it could make sense.
That's really cool. The other thought that I have for the treasury or not the treasury companies, the normal companies who have products and services that they order that they provide outside of that, is that it's essentially like any company at a certain size turns into a finance company. So if they have cash like Google or all these other companies, they maintain large cash balances in order to have cash, not like what you said, but to go and buy acquisition if they need to, or prepare for the future. And so there's
hold so much cash, although many companies do, which is interesting, such as Apple. But there's also this idea of the commercial paper market or even other money market type things where a company like Walmart may have no cash. This is a hypothetical example, but they may have no cash, but then they need to make payroll. They could borrow money for like 2 or 3 days. They could a very, very short-term loan. So you're right that the CFOs of these companies will do financial magic to get away with whatever cash balance they choose is something that they think will make them the most money. So some people have a lot of cash, others have less. I think with Apple, I may be totally wrong about this, and this information may be outdated, but I think they have like tons of cash in overseas, and they don't want to bring it back because it will pay taxes. So whatever their situation is, they will manage it in a way to. I think Apple was waiting for they're just going to bide their time and wait for the right government to be elected who will give them like a one-time exemption to move the money back. I heard something like that. I'm not sure.
Interesting. I just recently heard about something. It's in relation to Uruguay, but Uruguay is only reacting to an international thing that I believe is probably coming from the U.S., which is the U.S. is trying to get rid of the loopholes which I believe exist in Ireland. And what you just mentioned is just like all these different places that like the whole international system is totally crazy. And so there's the U.S. government and the international order are attempting to maintain a 15% corporate tax on all of the different companies in the world, which is so crazy given what we were talking about, the TV dying and social media. It all seems like everything is going to get decentralized, including human attention. And it feels like all these sort of, it really feels at the moment like in my personal opinion, that the forces of tyranny are winning. I actually think that they're losing. But it's like when somebody starts to lose control, they get really crazy and they start to do crazy things. If you want to talk about it, we can definitely talk about that, or we can move into the technical like ZK proofs. So if you wanted to respond to that, go for the last thing I said. We can do that, or let's go into ZK proofs. And what is a ZK proof?
There was a famous book, The Sovereign Individual. Is that what it was called? I think, and it was about like how the internet is going to change everyone's relationship with their government and flip it around so that previously you were a hostage and you could be farmed up for cash, but in the future, which is now the present, I suppose, you would be able to just change countries on a whim and move your money on a whim. And so then they would have to compete to retain it. It'd be more like businesses. And the countries would have to say, come here, we will offer you such and such. We'll offer you 0% tax. We'll offer you these laws. And they thought that would be a good idea. And I think I agree basically with what the book had to say.
And I think there's some nuance to it. I got to go back and read that book because I've now heard it cited so many times. The thing about the United States, though, is I think the large empires or former empires like China and Russia are going to clamp down on their borders. But maybe, I mean, even Russia wants people to move there probably because they now lack a lot of people. So it might just be the United States. But I definitely noticed that in the United States seems to getting their border much stronger. And I guess they're trying to attract with the $5 million visa program, but it's an interesting
it's a prediction
question
of the book. The Sovereign Individual, it says there will be various excuses to close the borders and keep the high value taxpayers in. They say there will be like a pandemic, fear mongering, and they say all this stuff and fear mongering about immigration.
So I definitely got to read it.
It's a very long book, but it does predict a lot of things. I'm not saying that that was what happened, but it does speak to a certain number of things are tilted in the direction of maintaining the old relationship between the taxpayer and the government. And they'll want to lean on anything that touches that, legitimate or fake. They'll just say, well, this is wishful thinking. They want a pandemic where we have to close all the airports and no one can get out. I think, Russia is in a demographic collapse, and I'm not sure anything can fix. They'll need lots of people to come in. Who's gonna go in when you're conscripting people and sending them in wars and things? I don't know. I mean, who's gonna want to go over there? That's the issue with. Of course, the dictatorship has many advantages, but it just has a few crucial disadvantages, which is just like people just take one look at that and they just think, well, it seems like a risk to me, so I just won't go there, and that ends up being worth a lot, I think.
So crazy. It's such an interesting time to be alive. Okay, let's go into ZK proof so we can actually connect it to what we've just been talking, because I know that ZK proof stands for zero knowledge proof, and it allows, in the same way Bitcoin allows two parties to transfer value to each other without having a third party be able to tell them whether they can do that or not. As you mentioned, the Bitcoin is not private. I've never heard that before, that you can see the keys in Bitcoin and you can see the amount transferred in Bitcoin. And then, so you've got a zero knowledge proof, and the zero knowledge proof allows the same thing, but it allows, actually it's probably a good time to hand it over to you. What does a ZK proof allow two people to do?
Well, in Zcash, first of all, everyone can reuse the same address, because as I've said, the transactions don't each transaction is not pegged to any address. So you just have one address. It's very long, but it says whatever, and then you can just post it publicly and show all your friends. They can then send money to you, but no one will know that the money's coming to you or from them, because you can reuse the same address because the addresses are not connected to the transactions. So that is a big difference.
How does how does the money get, or has value transact?
Well, okay. First of all, I'm not an expert on the actual ZK proof technology, and it's very arcane, but I can explain a little bit about the type of way that it works. It might work. So there is an idea of, so the snark or the NA, well, let me give you an example of like how it would be. Okay, so like there's one classic example where there's like a cave that has like a circle and you want to get out, and someone like a monster or something follows you into there, and you've got to go left or right.
Okay.
And if you go left, and they meet you, then they'll eat you or something. But if you go the other way, then you get out. And so the question is, if you tested the person a million times and they got out every time, then that would show that they know which way the monster has headed. The monster has headed left or right, and you evade them every time, or what have you. I probably butchered that, but that's like a classic example. So that's sort of interactive in the sense of you have tested them over and over again, and you see they pass every time. So I don't know how. And critically, this is the zero knowledge part, which is it's not justified. I'm not telling you how I get out of the cave every time. I'm not telling you how, but we all know that I can. So somehow I'm doing it.
Interesting. Okay.
So that's a way of making the argument that I know something without anyone really kind of explaining. It's just to have this repeated test.
Interesting.
So that may shed some light on it. This has been described as moon math before, and even like what was that guy's name? Zuko Wilcox, the creator of Zcash. He first would give talks about this, and he would say, "I have absolutely no idea how any of this works." And he had like math on the slides, and he'd say, "No one knows how this works." This was like in 2015 or something. So I'm hesitant to try to explain that. I'm not sure how to render it. But the thing is, there's partially because of Zcash, there's a large, and because of Ethereum, there's a large research community around this, and they have built software libraries, and we have just taken the Zcash one like piece. There's a huge stack, but they have like a ZK Snark like library now, and that's just open source online. So it is not. I don't know how fruitful it would be to try to explain, but we could. Yeah. We could continue to try, or we could.
Well, no. I've got a specific question because I only asked that question because I wasn't familiar with it, and that actually answered a lot of questions. It's because why it's been so hard for me to figure out ZK proofs is because there's moon math on it involved, and I'm going to definitely steal that terminology. So what was that tiny piece that you got from all of the ZK proofs and attached to Bitcoin? What's the relationship to Bitcoin?
Well, okay, that's a different question. But Zcash has produced different phases, and they named them after plants. Like one was like sapling, and one was like sprout, and one was like orchard. So there's like the latest version. Now to have the Zcash altcoin function, they actually need this kind of like turnstile thing where the money will leave the old zone and go into the new zone. And they made numerous improvements over the years. So for example, on the old Zcash, you could not run the software on a phone. It was too resource intensive.
Wow.
And also you had to have a trusted setup with a few people. So if they all colluded, they could break the privacy. And so, but you needed everyone to conclude. So as long as one person like destroys, this was called a toxic, I think it was called toxic waste or something like that was the nickname for it. Everyone had to like do this thing, like a group of people did this, and they had to delete what they had what they had on their computer. As long as at least one person did that, it would work. Now this was then upgraded to like something like 80 people, and then they have a new version. This is this thing called Halo 2, which did not require the trusted setup, or at least did something that was like, so infeasible that it's no longer a relevant issue. So this is all in their Orchard crate. They have like a Rust crate. I'm not sure how familiar you are with Rust crates, but Rust
I,
has put everything in these crates, and so they have a Rust crate for that
is
called
that like
Orchard.
a is that like a no what is it when you go oh man, how could I forget Docker? Is it like a Docker container for Rust?
Well, a little bit. Of course, it is kind of like a dependency in a way.
Uh-huh.
And just merely the crate is not enough, because it's not enough to have, that doesn't equal like a wallet or a node or whatever. But this is like the crypto library that does the moon math. So it's like moon
Okay.
math in and out. So we took that part. Connecting things to Bitcoin is a different matter, which is my other area, which is the side chain or the drive chain. It was Bit
Okay.
300.
Let's
And it
talk
was
about that.
something I've been into for a long time, about what is the right way if you don't like what Bitcoin Core is doing, if you think the block time should be faster or the block size should be bigger, or that there should be smart contracts or something else, or that how do you have like a competing piece of software where you have real Bitcoin on there, and in a way that
Mm,
actually works, where you have this infinite
mm.
freedom, the open source kind of freedom, but you also are not weighing everyone else down on Bitcoin Core with all of your weird ideas, which may be terrible ideas. So that was an old concept that I became obsessed with in 2015, and that is what became the drive chain idea. What is sometimes today called a side chain, although that word has also been abused, and now I think that word has basically no meaning.
So it's a drive chain. A drive
Yeah,
chain is what you're calling
right.
it. So
That's the Layer 2 Labs. We have like a few of these type of things.
and that's really interesting. I haven't picked this up since when was it was in 2018 when there was a block size war. When was the block size war?
Well, I would say it kind of ended around 2017, although arguably it continued for another year
Yeah.
as Bitcoin Cash and people. But it was August 1st was the launch of Bitcoin Cash, and then November of 2017 was the abandonment of Segwit 2x, which caused like the split. And then you
Uh,
could arguably say that they kind of still fought it out for like another year.
got it.
But Bitcoin Cash never really overtook BTC in terms of recognizability, adoption, whatever. So that's the short version, is that was the finally being ousted and going into like altcoin kind of status. Really, the block size war raged from maybe at least, I mean, definitely in 2015, it got very big with Mike Hearn and Bitcoin XT and the Scaling Bitcoin conferences. It's kind of always in the background a little bit.
Well, and let's talk about that because you're essentially you want to create a drive chain, and this drive chain will allow people to essentially transact with privacy off of Bitcoin, which is really interesting. Can you talk more about that? How the
Yeah,
privacy
I
will
have
work?
this Zcash related L2
Uh-huh. Yeah.
that I sometimes call Zside.
Zside. Okay. Cool.
There's a side chain but then I have a separate one called, you can just keep doing this all day, and I have a separate one that I call Thunder, as a kind of lightning joke, right? And that one, if you had, I have a plan to have like 14 geographically distributed. So you have like one for like North America, one for like Western Europe, one for like Southeast Asia. And if you had like 14 of these, you could have, with the software we currently have, it would be able to process every transaction on Earth. And I recently had like a contest to improve the performance and test 960 megabyte blocks and see how to improve the performance, which was, I think that was a big success. And anyone can go online now and look at we had like the benchmark script used to test the software, and it will generate, it takes like an hour, but it will generate a huge number of transactions, as if it will like kind of load this huge buffer of transactions as
Mm,
if there were
mm,
trillions of transactions per year, roughly 9 trillion transactions per year at a certain rate. And then it will connect like 10 blocks of that, and it will time with the stopwatch. And you can see how long that takes, and it's reasonably fast. It's only a few minutes or so. So actually, it's and it's 10-minute blocks. So as long as it's less than 10 minutes, then you're in business. So, and this is like on pretty normal hardware. That's just on like the GitHub runner thing. So that's my plan to scale Bitcoin. And I'm testing it at planetary scale right now, which is something that I really don't think anyone has done or even would even dream of trying to do. With Lightning, they realize, at least by now, on a subconscious level, they realize that you can't onboard people to Lightning without an L1 transaction, so it's a complete dead end for scaling. But everyone is just dancing around this. Lightning is just
wait. So I gotta go into that one because sure. Somebody tried to send me a lightning thing and it did not work. It seems like it's dead.
Custodial. It doesn't use Bitcoin network or the Lightning network. It's just it's like an app that
so you have a third party
someone's like SQL server on their app, and it's all fake, and that's all travesty.
So can you go into that specific thing that you mentioned? I mean, there's a bunch of things I want to go back to. One is the 960 megabyte block, but before we go into that, I want to go into Lightning, which is why is Lightning failing, basically?
Well, it's like a good attempt, but it has just fundamentally is incapable of doing the job. So Lightning was this idea that was this like 6 degrees of separation, like Kevin Bacon type idea, where if you want to pay someone, maybe you don't know them personally, but you probably know someone who knows someone that they know or something. You build this route. So the idea is we'd already have all these channels open with people, and that we could reuse on the L2 with the channels we would send not on L1, and on L2 we would be able to have a path and we'd be able to send them. So the problem is opening a channel requires one L1 transaction, and so there's not enough space for that even in a hypothetical world where we all only need one transaction ever in our lives on Bitcoin L1. There's not enough space. It would take like something like 6 or 7 years to onboard everyone, which is too long. But the bigger issue is
the block size.
Yeah, the channels don't last that long. You have to refresh them because of liquidity issues, and of course, people need more than one channel. And in fact, when Lightning works now, it often uses this thing called the submarine swap, which again, these are all fancy terms for just saying that Lightning's broken, but without admitting that out loud. So the submarine swap is a one L1 transaction made by one of the two parties to reset the liquidity. So it's like use Lightning, but they use one L1 transaction is required each time. So the Lightning part is kind of superfluous.
So the block size war was lost, basically. That's what you're trying to say.
Is that the problem was I actually was a small blocker, and I still am, and I'm in favor of shrinking block size because we can have the L2 that has the unlimited block size. So I always thought it doesn't matter, but the L1 block size can be very small. But the issue is that the L1, the block size war led to a situation where the large blocker said we need to increase the block size. They lost, and this discredited them. And it discredited anything related to like block size or blockchain design. And it discredited also the miners took their side, so it discredited anything related to like mining or collecting L1 transaction fees. This was like a 10-year setback, I think. And then meanwhile, the people who won, their answer to what are we going to do, because the block size does not scale Bitcoin. The L1 blocks are too small. So what do? Their answer was we'll scale in layers, and specifically we'll scale with the Lightning network. So this led everyone to put all of their attention on Lightning, which has been Lightning is basically the Theranos of Bitcoin, unfortunately. I hate to say that. But it has distracted everyone, and it has pulled everyone away from what they should have been doing the whole time.
But now people are realizing that. So now there's been like 2 10-year setbacks. Yeah. Now people are starting to come back. It's so interesting.
Only a few people too. But this is the start of this like Bitcoin season 2 and like the push for covenants and like ARC and stuff like that. Is people these are people, again, this is all just a way of admitting that Lightning doesn't work without saying that out loud. Because
it's very common.
Say that out loud, you won't get invited to the right parties and whatever.
It's very, very common. And Bitcoin is a bit of a religion. I'm just a supporter of that religion. Right. So it is very common. And they called it covenant too, which is really funny. It's
kind of a pretentious and like aloof, weird term that is not very accessible. It's not just like, where are the Anglo-Saxon words? words, like backhoe or whatever, wife beater. Where are the
Rootstock.
clear words that
Yeah.
just say what you mean? They're nowhere to be found.
Uh,
Common and so it's just a bunch of, but this is the problem with Lightning also is that it's very technical. You can get the VCs
oh,
just
interesting.
if you pronounce the right words, the VCs have no idea what's going on, so they will just invest. And so that's why it is unfortunately that's part of why it's a setback because it's a
But
self-reinforcing
yeah, no, it's totally
parasite.
nuts. It's so strange and it's absurd and it's funny, like a lot of things are now. But you're optimistic because you're building this thing that is
Yeah,
going
well,
to
I mean,
change.
it's quite hard to be pessimistic when, first of all, Bitcoin has done like 100,000x ROI.
Mm-hmm.
So Bitcoin has
Mm-hmm.
succeeded enormously.
Yeah.
Everyone hated it. While all the years I've known about Bitcoin, everyone was hating it. It was
Yeah.
awkward to talk about. You couldn't even talk about it with
Yeah.
like your friends and family because
Yeah.
it was just so
Weird. Yeah.
stigmatizing to and you seemed like you were getting scammed the whole time. But yet it prevailed and crushed everyone. It became a voting block issue. It made everyone wealthy and powerful and interesting. And the other thing is, I had the drive chain idea back in 2015.
Mm.
So the whole time I've
Mm.
known that it's possible to make Bitcoin scale to the whole planet, and it's possible to have Bitcoin transactions that do the same smart contracts, have the same EVM as Ethereum, and it's the same privacy as Zcash. So I always knew that that was possible in theory.
But
And I
because
kind
of
of
the
just was
block
waiting
size.
around, and then eventually, in late 2022, I started this company because I just was tired of waiting for this to happen. So I was like, we'll just have to do it myself. It's still a lot of what I have to say is misunderstood by a lot of people. So
So, but what is the because you said you were a small block size. What is the
right
enable?
on L1, but then 960 is L2. So this ignores the night and day difference between L1 and L2, which is the all important
Okay.
night and day difference.
Okay.
The L2s are optional. If they fail for any reason,
Uh, yeah.
if they
That's
get
good to know.
attacked, if they have a bug and they crash, if the government says running the L2 software will
Oh.
get you shot in the head and killed, it doesn't matter. That can just fail, or it can just even be on pause. It can just be, we can just bide our time. It's like the Mott and Bailey type thing. If that fails for any reason, it doesn't make any difference. The L1, if the L1 is mandatory for everyone to run, in order for the miners to get paid, in order for the blocks to flow, in order for the proof of work to happen, the L1 is mandatory for everyone. And really, if you think about it, the way I have structured it, it's like the L1 is mandatory. And then if you want to run the L2, you need the L1 plus the L2. So every L2 node needs an L1 node, but the reverse is not the case. So what we're saying is it's kind of like a la carte. How much do you want everyone to have to pay in terms of the cost of running the full nodes? So does that make sense? So you
Mm,
can see why at first you want the first pass to be as low as possible because you don't
mm,
want to exclude anyone from
mm.
the first zone. Then when you want to staple more stuff on, you can grow it to whatever you think is the right size. And then maybe there'll only be a few nodes but it won't matter because you're pushing the envelope. This is explicitly we've switched from something that everyone must do, which is kind of like like a pacemaker. You don't want it to be like very adventurous. You want it to be very simple. You want it to be very reliable. You don't want the
Mm,
pacemaker to like have Bluetooth or something, right?
mm.
But the L2s are a completely different thing. They're optional. So that's like we now we have them of all shapes and sizes. So we have the Zcash one, we have Thunder, we have a few more
Oh, got it. Got
also.
it. So you're making multiple L2s because you're just thinking about it from an adoption standpoint. If it gets adopted, uh, uh, an L2. Let me explain what I think an L2 is, and then you can help me figure it out. An L2 is basically something. So you got an L1 that is computing blocks. The miners use their computation power to basically do a cryptographic puzzle, and then they get rewarded with that cryptographic puzzle, and that's to mine one Bitcoin block. The L2, what is the relationship between that and the L1? The L2 and the L1 in that scenario.
Well, I
Is that
think
right?
we have to sort nodes from miners. The
Okay.
nodes are doing the CPU work
Oh, interesting.
of assembling the transactions into a block
Okay.
and checking each block, storing each block on your computer. So this is the so-called data availability problem sometimes.
Mm.
So the blockchain is stored by the nodes, and the miners. It's actually the miners are their own kind of similar to the L2 L1 relationship. And you need to run a node in order to mine, or you need to talk to one. You need to have someone out there has to give you information if you're a
Oh,
miner. The
interesting.
miner is like a customer of the node.
Uh,
It's a little bit backwards than the way a lot of people think about it. So not if you're mining, you either need a node yourself or you need someone's node somewhere. You need to let them, you need to
got it.
borrow it or
Got
something.
it. Got it.
Everyone who gets paid, if you run a store and you accept Bitcoin, or if you're a
Yeah.
laborer
Then
and
you need a
your
node.
boss pays you in Bitcoin, the node is what tells you whether or not you have been paid. There are various hacks and cheats and things, but that's really the purpose of the node. This is another thing that very, very few people understand. This is the part of the whole knots versus core controversy is based on misunderstanding this as well, which is what's the point of the node. The point of the node is to validate incoming transactions. So if you don't own a store and you're selling stuff for Bitcoin, or you don't own like a graphic design consultancy and you're being paid in Bitcoin, then the node isn't doing that much for you. You could maybe say it's archiving the blockchain, but we don't really need that as much as people think. So,
Hmm.
whereas if you're something like Coinbase or you're Kraken or whatever, people are sending you Bitcoin all the time. So
Do they run
their node
nodes?
is really important, and
Oh,
you bet
interesting.
they run. Not only do they run one node, but they run multiple old. They're probably running Bitcoin 0.12
Yeah.
and 13 and 14. They
Oh,
run them all, and if anything weird happens, they have like a giant button that they press that probably halts the whole. This is just
yeah. Yeah.
how I assume it works,
Yeah.
but
Yeah.
I've talked to people in the industry, and I know that it does work, something like that. So,
Man.
so those people are critically relying on the nodes, and then other people just kind of think, well, I'm running my node to this. They think this is like some kind of American Idol text who you want to win situation, which it is not. But that's fine. Also, that people are. I'm happy that people are excited about something or whatever. But so the node, to review what I was talking about,
Yeah.
the miners need a node in part because the miners are getting paid either by their pool or they find a block and the block is going to pay them 3 Bitcoin, or it used to be 50 Bitcoin. So obviously in the past, if you were mining, you wanted the node because you wanted to see if you hit the block or not, which is the only real way to know. So these
Mm.
are all people who have money coming in. And so the nodes do this part. The miners are just grinding SHA-256. They grind this SHA-256D, double SHA-256, and they try to get the hash of the block's header to be very, very low uh, because the hash is a giant integer. And
Yeah.
so they say it has to start with a certain number of leading zeros. That's like a computer science term because what they're thinking of is the memory of the computer, which is ones and zeros. So they're thinking of those zeros. They're thinking 0, 0, 0, 0, 0. But a regular person would just say each block header, basically the hash is basically a number. It's a
Mm.
huge number,
Mm.
but it's a number chosen between 0 and like 2 to the 256
Mm.
power, which is enormous. Which is basically, I think I used to be able to do this a little bit better, but I think it's something like 16 to the 64th. Is that right? Is 2 to the 256? You can change it around. I may be off by 1 or 2, but that 10 to the 80th is the number of atoms in the universe. So if you see 1664, of course it's not, but I'm just saying like this is like the biggest number. It's like really, really big. So you're picking a big number, and the difficulty adjustment is saying it's only valid if it is in a
Oh.
very narrow set. So if the first bit starts, you think about the first bit is 0 or 1.
Yeah.
If you say we only want the numbers in the first half, we're
Huh.
going 0 to 2 to the 256,
Yeah.
the max.
Yeah.
If you say you've got to make it halfway, at least, that's like saying we'll give up half the hashes, and the number has to start with at least 1 0.
uh,
It's kind of, there's this thing called Indianness but I don't want to confuse. So
Indianness.
you have this huge timeline or this huge
Yeah.
space,
Yeah.
and half of them are in the top half. That's the first 0, and then 25% of them start with 2 zeros in a way. So when people say this about solving the puzzle and must start with a certain number of zeros, they mean the more and more zeros eventually in the top 8th, the top 164th. And in fact, we've really crunched it way down where it's a tiny, tiny, tiny percentage because there's 256 numbers that could either be 0 or 1. So it's a lot. And so for you to even get to something like 16, or I mean, like I think 2 to the 10th is like 1,024 or something. So you're already at throwing away 99.9% of the blocks, even when you're just starting with 10 zeros. But now at this point, we're starting with like huge amount. So that's what the miners do. I don't know if maybe
So
that was too weird,
no.
but
This is all interesting because it's like the way I learn is I get an abstract concept, and then that abstract concept, the more I go into it, the more I realize that it doesn't accurately reflect reality, and so that number that you were describing, that really long number, I got that. That's the puzzle.
that
That
is
they're
the hash effect. So when you go on the block explorer and you click on a block, that's what that is. You could go
got it.
on right now and look, and
Yeah,
you see not only does it start with the zeros in the sense of the bits in the computer's memory, but when you have 8 of those in a row, it ends up being a zero, and when they put it in hex anyway.
mm.
So you'll see it actually, the real one has lots of real zeros that it starts with also, because it
Um,
just has so many zeros.
and the miners are
Or I may
competing.
have a double or triple check. It depends on how, because when people do the hex, they do 2 hex characters, and that's 256. So it's actually 2 zeros. But I don't want to this is not the type of thing that you should just say glibly on a podcast. Everyone can look up like exact details of it all. But what I'm saying is when you look at the block, it will print it out in hex. It will not print it out in binary, like a big string of ones and zeros.
Got
It
it.
compacts it
Oh,
to save
got it.
space.
Got it. Got it.
That's
Got
why
it.
remember that joke from Silicon Valley, the show, and like the first episode where he does his multiplication tables in hex, and he says like what 5 times f, and he says it's 75 or something. He
Yeah.
just made that up. But the point is, there's hex is like counting to 16, and if you count to 16 twice, you get to 256. And so 2 zeros, and I don't know. This is probably boring people
So,
at this point. But the joke. Look up the joke. I think it's what's 5 times f is the joke. He
so,
just made that up, Erlich Bachman, the actor. But
so,
it's funny anyway.
so, what are the miners competing to do in that thing that you just said?
What they do is they have a trivia. The block is changing all the time, first of
Yeah.
all, because new transactions are coming in.
Yeah.
The transactions change the Merkle tree,
Yeah.
which
Okay.
is
Merkle
part of
tree.
this
I
thing
gotta
called
go
the
study
header.
that. Yeah.
I'm sorry.
No.
Your
Actually, I was
audio.
just saying I gotta. Can you hear me now?
Yes.
Yeah. I was just saying I got to study the Merkle tree. So, can you go back to that
Yeah.
part where
Oh,
what
your
do they
audio
do?
did like something weird. I think maybe you hit the microphone or something.
Yeah.
So it just sounded weird to me for a
Yeah.
second. Okay, so the one thing is that what is a Bitcoin block, and it's actually made of this thing called the header, which is only 80 bytes, which is very small, which is extremely small. It's the header plus the vector of transactions. So it's very important to separate these two things to have a proper understanding of what the miner does. And so the vector of transactions is hashed to this Merkle tree, and then the result is just this tiny little 32 byte thing, which is 64 characters long. And this goes into the header. The header only contains a very small number of things: 4 bytes for the version, the hash of the previous block, the hash of the Merkle root, and this, you can see how this is laying it out in space. So like you have header, block 1, 2, 3, 4, 5. Then beneath the block, theoretically, you have like the vector transactions, and you have like the Merkle tree, which is like a triangle. And so it's a version, previous block, hash Merkle root, the timestamp, and this thing called the nonce. And these are the only things in the header, and they scramble every time a single byte or even a single bit of the header changes. The hash of the block will change, and that's the thing that has to be beneath. It has the zeros. So I don't know. Maybe this will help, but you can imagine a bunch of hashes. You know, like what a hash. When I'm talking about a 32 byte hash,
Yeah.
it's this. Imagine hash of block 1, 2, 3, 4, 5, just arrayed in a big line.
Yeah.
Then beneath that, that's 32 byte hash. Beneath that, it'd be like an 80 like a little box, 80 bytes, and it contains all this stuff. One of the things it contains is the hash of the previous block. So it'll be, if you looked with your eyes diagonally, you would see the same little thing.
Oh, interesting. Got it.
And then beneath each of those tiny little boxes, there's like a huge box that has like a huge list of all the transactions that were in that block.
Yeah.
So this is like really like Bitcoin Review 101. I'm like But it's not, well, maybe it's not 101, but I'm just saying this is funny because this is like this is older stuff.
Yeah.
I'm trying to see if I can still remember it all, but I think I can. And so the hash you want to be a very low number, low integer. The miners scramble. They will scramble the nonce. They take the block and they increment the nonce.
Yeah.
Nonce is even named. There's a number that is used only once, and that is the origin of its name.
Got it.
In fact. And so when they do that, it switches the hash to something else. So they're kind of shuffling the deck each time.
Got it.
To get a new,
like a database ID. It's like a database ID.
Cards from like maybe you said like Ace of Spades is like the lowest or something, and like whatever King of Diamonds is the highest. I don't know. I'm just making this up.
Yeah.
But if you named it 1 through 52, they're kind of shuffling the deck and drawing the card.
Yeah.
And if they don't get close enough to the top, then it's not a valid block. And so they're hoping to get very, very close, except instead of going from 0 to 52, it's 0 to 2 to the 256. This enormous number is a unfathomably large deck that is absolutely gargantuan. And that's why they do it millions of times. Now, in practice, they don't have to increment the nonce so often, although they do, because the timestamp is also changing every second. And the Merkle tree is also changing as new transactions show up in the mempool and are broadcast on the network. So actually everything is changing. All those things are changing. And in fact, in the Coinbase, the miners scramble this thing called the extra nonce, and they do all kinds of other stuff too. They also scramble the version bytes. They scramble everything to try to go as fast as possible. But this is just this is completely different from the node thing where they are using the CPU to basically make a trivial change to the block that has nothing to do with the transactions in it, and then SHA-256 again. So that is what all these ASICs and whatever are doing. They are doing that. They're doing a completely different thing, which is not really that complicated, but they have to do it as many times as they possibly can, as quickly as possible, and as cheaply as possible. And so that's what they are doing.
That's what they're getting rewarded for? Is doing
if they hit... when they change the block, eventually the hash will change every time, remember?
Yeah.
So eventually, not anytime soon, but if they try, think about it like this way. If they try 1 hash a second, then the hash just sort of is what it is. But if they try 2 hashes a second, if they can make the block, calculate the hash, then shift the block and calculate it again, probably one of those hashes will start with a 1 and the other will start with a 0. Not necessarily, really. But then imagine you can do 4 hashes at once. They're all random. The hashes are random and unpredictable. So if you can do 4 at once, probably you've got one that starts with 1, 1, probably one that starts with 0, 1, probably one that starts with 1, 0, and then you probably have one that starts with 0, 0. Now, of course, I'm just making this up. This is not like totally to be relied upon. But the point is, if you do it more and more and more and more, eventually, you can guarantee that within the first second, you'll have one that starts with 5 or 6 zeros. And but then the goal is to do it so many times that you eventually, before any of the other miners, you find one that has enough zeros to count.
So they're all trying to cheat, but it's a virtuous cycle. Is that what I heard, basically?
It's like a race. It's like a 400-meter dash.
Okay.
So the faster you run, you're more likely to win. It's not quite the same because it's not the 400-meter dash is like a deterministic, like physics.
Yeah, interesting.
These things are this is what's called memorylessness property in statistics. So the hash does not know. You can have 2 examples. So imagine trying to crack a safe, and the safe has just a dial, and if you get the dial right, the safe opens.
Yeah.
It is numbered 1 through 1,000. You try 1, and then it doesn't work. You pull the lever. You try number 2, it doesn't work. Try number 3. On average, it should take you about 500 tries because 500 is where you've crossed the point of having tried half of you've tried 1 out of every 2.
It.
So on average, it should take you 500 tries. That is not how Bitcoin mining works at all. It works a different way. You have to imagine that there's a long hallway with an infinite number of safes that are all identical, but they're all set to random values. You don't know which they are.
Whoa.
And you go up and you spin the dial randomly, and then you pull. It lands on 37 or something. You pull the lever, and if that doesn't work, you walk to the next safe, and then you try again. That is what Bitcoin mining is like. So every single spin is the same. But if you can run down and you can just pull as many levers as you can, spin all the dials and pull the levers, you're likely to finally hit and open one of the safes. In this case, by the way, it should take you about 1,000 tries because you don't make any progress. So you're stuck at 1 out of 1,000 permanently. Whereas, so you can see after, and the other thing is when you spin in the previous example where you only have one safe, the first try is 1 in 1,000, but immediately your odds start to improve. And in fact, once you get to the 500th spin, it's more like 1 in 500.
Because
by the time you get down to the last two numbers, it's a 50-50. It's either going to be 998 or 999. Maybe you don't know which one it is. At this point, you might feel your luck is so bad, you might skip 998 and try 999. You might feel like an idiot for starting at 0 or starting at 1. But the point is now there's only 2 that it can be. So it's actually down to 50-50 at that point. And in fact, if you tried them all and there's only 1 left, then it's a 100% chance, of course, that one will be the one that opens the safe. This does not happen in the Bitcoin mining example, the memorylessness example, where you're walking down the hallway. No matter what, it's always a new thing. Even if you just had 5 that were 7 in a row, the next one could be 7 or it could not. You have no way of knowing. So it's always 1 in 1,000.
Okay, so and then for the last 5 minutes or so, what is and you have an appointment afterwards, I think, as well. But if you have to go, let me know. But what is how do the L2s fit into that? What you just described? Because we have
that's important. So we separate nodes and miners. So we did like a long digression about miners, but the nodes are what process every transaction and store every transaction and serve it back whenever you ask. So when a new person wants to sync a node, it's kind of like BitTorrent.
Interesting.
Where they download every season of Game of Thrones or something and someone's uploading.
Yeah.
So this part is crucial because if no one mines, then maybe there won't be any block until someone starts mining again. But if no one provides the blockchain data, then no one knows if anything is a double spend or not, or no one knows. This is the whole point of Satoshi's design. So no one can spend any money without the blockchain history. No one knows who has the coins. So the block size debate was kind of about this, which was like, what's the rule? Like, how much are we all obligated? It's like you're kind of you and a bunch of friends are going to go on a trip. Like, are we going to like Tahiti or something? Is it going to cost a fortune? But in which case the trip might be better, but everyone's going to have to pay more money. Or are we just going to go to the local bar, in which case it's much easier. It's going to cost less, but it might not be as special. So the block size is kind of like, it's a collective issue. Like, what are we all in for? The L2s, as I've said, the way the L2s work is it's sort of saying all of us are agreed to go in for more stuff. So we're saying we're going to go to the bar, and then some of us, a subset of us are going to go to Tahiti, or we're going to go to Disney World or whatever. Take your pick as to what a great vacation is. But that's the point. And the question is that this makes it very easy to transact on L1 and send the coins from L1 to L2 and transact on L2. But what it does not make easy is having the coins come back from L2 to L1. And the question is, how do we do that? That is the big sticking problem. Because remember, some of the people are only on L1 and they have no idea what happened on L2. And they don't want to know. Because and even if we forced them to know, that would be bad, because that's just forcing them to go to Tahiti. And they didn't want to go. So the question is, what do we do about that? And what I do is I bundle all of the entire activity on the L2, including the withdrawal transactions, over a period of months. The entirety of the outstanding activity, I bundle that into one transaction that has one hash, and then I basically have the miners on L1 very slowly approve this hash. This is deliberately extremely slow for security reasons.
How many
it requires everyone to lie. It's a little bit like the cave thing, the ZK in a way, where it requires that if you want to misstate anything that happened on the L2 ever, the whole trajectory in the withdrawal period, the hash will be different, and the miners will have to basically knowingly endorse hash A does not equal what it should. It should be
Wait,
hash
that,
A equals hash A. It will equal something else that's completely different. And the point of that is to make it so that the miners are the ones who can basically slowly approve the withdrawal. And the reason why this works is because of something else that was invented by Satoshi in 2010 called merge mining, where the L1 miners can collect fees from other blockchain networks for free. So they get all this cash for free and with doing essentially zero additional work. So little that it might as well be zero. And this is more CPU work. This is not any of the hashing work. So it's kind of like they open all the safes at once. There's like not only is there a long row of safes, but so you may be familiar with a Namecoin, which was merge mined with Bitcoin ever since 2011.
No.
And you may also be familiar with Dogecoin and Litecoin are merge mined.
Yeah.
So when you find a block of what you actually do under the hood is you actually run Namecoin software and you find a Namecoin block, but the Namecoin block is built so that part of it is a Bitcoin block. Okay. So you always find Namecoin and a Bitcoin block at once. And you can do this to an unlimited degree. So you can actually find blocks on all the L2s at once, like 5, 6, 7. And so the logic of the system is this, which is that miners will make a ton of money from this system, an enormous amount of money in revenue from this in return for doing very little work. So they would not want to kill the goose that lays the golden egg. And that's why it would work. Another leg of the logic behind why this is the way it is that even if it's very slow, the withdrawal coming back, first of all, the deposits are instant. But second of all, there's like a secondary market. So you can imagine an example where there's like a casino, and the casino you can win. The casino is like the L2, and you can win and lose your money in different ways here at this casino. And but then when you want to cash the chips out, that's like the withdrawal from the L2 back to the L1. And in my version, it's very, very, very slow and very secure. And so you go to like the counter and you've got your chips, and it's going to take you maybe months to get the chips cashed out, which is like going back to L1. However, the reason why this is not a problem is because a secondary market will develop where there's like a bunch of people in front of the exchange counter at the casino, like a bunch of people who are just like, listen, I will pay 99. I'll give you today immediately. I'll pay you 99 cents on the dollar. I'll buy you out. And then I'll walk. These people get like a little yield. They'll walk the coins slowly across.
And so yield in Bitcoin? Yield in Bitcoin or yield in the layer 2?
Yielding. Well, they would technically buy the L2 coin. So like, let's say I had 100 coin on the L2, 100 Bitcoin on the L2. I swap it. I don't want to wait. So I go to the person who gives me 99 BTC on L1, and they take my L2 coin. Now they're collecting all the L2 coins they have in a huge pile. They have like 100,000 L2 coin. When they walk it across slowly, it will be deleted from the L2, and then they'll get 100,000 L1. But it'll take a while.
So it's allowing equal exchange from the people who do participate in the L2 with the L1 eventual.
Right. What BIP 300 actually does is it keeps track of all the coins that have been sent from the L1 to the L2, and then it pays them to their new owners eventually after a very slow process.
Okay, so well, I think I've reached my limit of understanding abstract concepts for today. But I would love to do another one in about 3 to 6 to 9 months to understand all the other stuff, because I feel like with the same level of complexity of just following what happened with Bitcoin, there's a lot of things we can cover, and I have a lot of questions about all those other things. So I'd love to do another one, unless there's something else you want to share.
On layer2labs.com/download, you can download the software and play around with it. There's Play Money. We have like a signet, and we are also testing with more realistic tests that makes it much more look like the real Bitcoin network. So this is probably a different way to learn. You can try out the privacy sidechain and the Thunder sidechain. So yeah, if you go to layer2labs.com/download, you could try it out. And it just says Play Money, so you won't lose any real Bitcoin or whatever like that. You can just try our test network and see the software for yourself, which is probably a better way to learn certain things.
Cool. I'm going to try it. Thank you so much.
Thank you. Hey, thanks.